price. That's the number one technical indicator.
You do best by investing for the longer term.
If you can't explain what the business is doing, then that is a huge red flag.
Some technological change is going to put you out of business.
It really is a genuinely extraordinary situation.
Hello everyone, I'm Ed Gotham and welcome to Opto Sessions, where we interview the top traders and investors from around the world, uncovering their secrets to success. Today, I've had the pleasure of interviewing Rob Koyfman, a former Wall Street veteran and founder and CEO of Koyfin. Koyfin is a financial data and analytics platform for researching stocks and understanding market trends. It really is an exceptional tool, which I use myself on a daily basis now, which is particularly good for those who like digging into the fundamentals behind stocks or comparing the performance of different stocks or sectors or themes over different time periods. We discuss Koyfin in detail in the interview and finish by digging into Rob's investing process with examples of how he uses Koyfin himself. After the interview, if you're interested in using Koyfin, you can sign up for a free account at koyfin.com. I promise you won't be disappointed. Enjoy. Hi, Rob. How are you doing today?
Good, Ed. Thanks for having me on. Really excited for this conversation.
No problem at all. Am I right in saying you're calling from New York?
I'm actually in Miami for several weeks. My wife and I had our first baby in November, and she has maternity leave, and I can work from anywhere. So we actually booked this trip before Miami got to be a very popular place on FinTwit and Twitter.
Yeah, that's awesome. Sorry, could you explain that about how is it popular on FinTwit? Is there what startups and?
Oh yes, sorry. Sometimes when you're on Twitter, you feel like the whole world is on Twitter. But so on Twitter in like November and December, all of a sudden a bunch of VCs started saying, "Let's leave San Francisco, move to Miami." And then the mayor of Miami kind of responded and said, "Hey, I'll do anything you guys want to ensure that you have a great environment here."
Oh yeah, I heard about that.
And so he met with a bunch of prominent kind of VCs. There's been kind of, I don't know if exodus is the right word, but there's definitely been people moving from San Francisco and other parts of the country to Miami and trying to start this little hub of a startup community here. And some people from FinTwit, some investors have moved here as well. So
Koyfin is moved to Miami, is it, or not yet?
Just for several weeks. So just here for a couple of weeks, and then we'll see. I've always wanted to get out of New York and kind of move somewhere warmer, but not sure if it's Miami or somewhere else.
Nice. And what's the attraction about Miami for everyone?
I mean, I think it's the warm weather is number one.
Yeah, okay. And price, I suppose, in comparison to San Francisco, right?
Yeah. So, compared to San Francisco, anything is cheap. Miami is relatively cheap.
Yeah.
I'd say it's a really good travel hub. So you could really kind of go, if people ever travel again, could go to Europe pretty easily and other parts of the country.
Yeah.
So the state taxes come up a lot in terms of people not paying state taxes. Although if you're like a rich VC from San Francisco, I'm not sure why you're concerned about state taxes.
And what's the situation like there at the moment in terms of, I suppose the COVID stuff still sort of going on?
Yeah, so it's a little bit more relaxed than in New York. So restaurants are more open and you can eat inside with a mask. And indoors, most people wear masks, but because there's just so much outdoor activity to do, like on the beach, you're able to socially distance without wearing a mask. So life feels a little bit kind of more normal than it does in New York.
Yeah.
But then life in New York felt much better in the summer than it did in the spring or in the winter. So I think it's the fact of warm weather and outside.
Mm-hmm. Yeah.
How are things in London?
We're actually in full-on lockdown at the moment.
Oh man!
And it looks like we will be for at least another month and a half. It got pretty bad actually recently. In fact, the worst it's been. So the numbers are coming down now, but it was this new strain that sort of instigated this new exponential rise basically in cases and obviously deaths as well. Later on, and it appears like we're on the better side of the curve now. But it's still sort of dangerous environment at the moment, which is not ideal. But hoping by sort of spring, summer, the warm weather would make it a lot better.
Yeah. Oh man, that's tough. These vaccines can't come soon enough, huh?
I know. Yeah. So back to the stock market, which is also incredibly interesting at the moment. There's a lot of chatter on Twitter at the moment. It feels like 1999 again. I wasn't investing in the stock market through that, so I can't directly compare it. But I'm sure you've had some experience in that sort of area. There's some ridiculous moves for all purposes, garbage stocks such as GME, AMC. I'm actually seeing today that AMC is currently down, I think, 61%. GME is down 25%. BlackBerry down 40%. They all seem to be coming back today off the back of meteoric sort of rises, but retail interest has exploded over the last year, particularly down to sort of accessibility, I think, from apps such as Robinhood, etc. And also interest in derivatives has exploded, options, contracts. Just want to ask you, what do you think about this new behavior from retail investors? Is this the new normal?
Oh man, there's a lot to unpack there. So yeah, so I was in high school in '99, and I think I bought my first stock in '98 or '99. It was called CMGI, and that was a stock that went from like $2 to like $800 and back to 2 cents. So definitely was there in that mania part of the cycle. I think a couple of points that you asked about. So first of all, I think it's great that individuals have access to the market, and apps like Robinhood and the fact that commissions are now zero make it just much easier for other people to participate in the market. So I think having that ability for individuals to participate and to really experience investing and to take on that risk themselves without farming it out to an advisor, I think that's great. I'm really glad that that's happening, and I hope it persists for a long period of time. In terms of similarities, there's definitely a feel of excess with some of these valuations. I would say it is not like it is in 98, 99. In 98, 99, you literally had a whole chunk of the market going up 10, 20, 30, 40, 50x without having any, not only earnings, they didn't have any sales. So it was, I don't know if you've ever heard the term market value to clicks. So that was kind of how things were being valued, and like, oh, this company has like a lot of clicks. They'll figure out a way to generate sales, and they'll figure out a way to generate earnings eventually. So I think there was much more excess in 98 and 99 versus today. However, looking at some of the moves that we've seen over the past couple of weeks, and some of the activities and options and some of the valuations which have gotten a little bit more stretched than before, things are definitely a little bit, let's say, more bullish or more frothy, as someone would describe. But I don't think with this stuff, I think it continues much longer than people expect. And I think given the macro environment and the central bank kind of cycle where we are today, it's going to continue for a little bit longer, for a lot longer than some people expect, calling the top right now.
Yeah. But this sort of euphoria behind certain stocks is not even euphoria. It's just like the retail investors banding together and going all in on specific stocks as a community. Because I don't think there's ever been this many retail traders probably in the stock market, not only just due to population increases, but because of accessibility has opened it up to everyone. So it's like new ground, really. And it'd just be interesting to see if this is behavior that exists in the stock market, but isn't really down to any sort of fundamentals, which is what, price has never been purely based on fundamentals anyway, but it's sort of gone to an extreme. And whether or not this, some people will now trade, a strategy going forward now would be just to latch on to the ones that the crowd goes behind.
Yeah, so it's really interesting. Over the past, obviously, couple of days and weeks, you've had these really interesting situations with Reddit and investors banding together. I'd say it's a very special case that's not gonna persist. I don't think a year from now we're going to be talking about kind of like, where is Reddit going to be hunting next. And that's because GameStop was a really unique situation in that you had incredibly high short interest. You had short interest over 100%. And so the reason you're able to have short interest over 100% is when somebody shorts a stock, they sell the stock, and then whoever buys the stock, that person can then lend out those shares to be shorted again. So it's sort of like fractional banking, where there's reserves and then there's actually total money supply, which is a multiplier effect. So short interest works the same way. And you had this incredibly high short interest in the stock, and you had real fundamental reasons why the bull case was actually getting stronger in terms of management changes, in terms of the company pivoting towards more online sales, and in terms of this gaming cycle that was coming up. And I'd say when the stock went from $3 or $4 to $20, that was sort of the more fundamental reason why it did that. Why it went from 20 to 100 to now 400 or 500, wherever it is now. I think that was a very technical reason behind it, which is kind of this really high short interest, the fact that you had this community of Reddit users identifying the situation. And I think what's not mentioned, what's really, really important, I think you just have a lot of traders and investors and CTAs now following this trend and amplifying the trend. And so I think in the short term, they're going to be using this Reddit signal as a way to pile on. I think longer term, that signal is going to be arbed out. And I think a year from now, when the Reddit community says, hey, let's buy this stock and let's drive it up, I think there's going to be too many people that are trying to arb that out for it to really matter.
Mm-hmm, mm-hmm. Yeah, that's interesting. So the smart money will adapt to the new behavior eventually and be able to sort of do their normal business on it, reacting quicker than the retailers, traders potentially. Is there anything you think? So you discussed sort of briefly this. The general market trend is up at the moment. If we just disregard some of this euphoria in certain stocks. And it looks very bullish. Do you think this is a new bull market that's sort of starting, or there's so many people that think already that this is just a ridiculous rise, but there's other people that are saying that it's already a new bull market that started already that people just aren't aware of.
Yeah, I'm in the new bull market camp, and obviously who knows what's going to happen in the future. But I'm if you look at the market over the last 50, 60, 70 years. One of the biggest things that drives cycles is Fed policy, which leads to liquidity and leverage. And so based on what we know today, the Fed isn't likely to raise rates until 2024 at the earliest. So that's sort of what the market is implying right now, what funds rates are implying right now. So given that, and then historically that bull markets just kind of continue until the Fed starts tightening liquidity, you're in the situation where the Fed is trying to correct one thing, which is unemployment and some of the real imbalances in the economy. And the market is really anticipating or being driven by this liquidity rush that's going into it. So I think at some point the Fed will have to recognize that the fact that these valuations in the market are going up, and that's unsustainable, and that's going to present some risks to the real economy. I don't think they could ignore it forever. And it'll be interesting how they handle it. Probably not with high rates. They'll probably try and handle it with regulation or tightening certain restrictions or trading restrictions or whatever it is. But that's gonna come to a head at some point, and it'll be interesting how they handle it. But I do think that we're in a new bull market. I think ever since I started following stocks, it's always really easy to say like, "Oh my God, stocks have gone up like this. How much further can they go?" And the one thing I've learned is, these trends persist way longer than what most people anticipate. So I'm in the camp of riding the trend until it stops.
Yeah, of course. And in the short to medium term, do you think there's anything that could, stop this momentum for a little bit before it, continues?
Yeah, I think there's going to be a lot of things that can stop this momentum. I think kind of like in this bull market trend, there's going to be pullbacks that are sort of 5 to 15% in the overall market, and obviously much larger. There's going to be really big rotations that happen and really kind of hurt some investors who crowd into a factor or crowd into a trade. And you sort of saw that happening with the short interest factor. You saw that happen with kind of tech and small cap with that reversal. You saw it happen with value and growth. So I think there's going to be a bunch of rotations that happen as well. In terms of kind of like what are the known unknowns that could stop this market or that could cause a pullback, I think geopolitical risks are obviously the world it seems like getting crazier and crazier or more polarized.
Yeah.
And so that's I think always a risk. I think the new Biden administration, I think there's gonna be kind of some new policies that will be digested by the market in terms of regulation, in terms of regulation of the energy sector and the financial sector. But I think kind of like the unknowns are the real risk. And what we learned over the past year, like if we were sitting here a year ago, we said, what are the risks of the market? It's like, this stuff is so hard to predict. So the million things that could go wrong.
Yes, of course. Awesome. And I think it's about time just to get a quick introduction to yourself and your background. It'd be great. You've had quite a long career in finance, and it'd be great to know, just a sort of a quick overview of where you've been and what you specialize in.
Yeah. So I started my finance career in Goldman Sachs Research. I was covering single stocks. I was covering the real estate sector. And then I transitioned over to the portfolio strategy group at Goldman Sachs. And that's where we started looking across the market to identify sector trends, thematic trends. And that gave me a much broader introduction to other sectors versus kind of the single sector focus that I had before. And so I was there for about 6 years. I moved to London to be at a prop desk. So I was kind of on the investment side for a while. I then moved back to Citigroup, where I worked on the trading desk, and I was taking thematic ideas and basically expressing them via ETFs, baskets, and options. We were doing that internally through a book that we were managing, and also externally talking to clients and pitching them trades. So that was a really interesting experience. And then after that, I worked at several hedge funds. So on the buy side,
as an active trader or investor, or
yeah. So my last I was at sort of 3 buy side shops. One was Caxton, which is a macro fund, and there I was more of an analyst to some of the portfolio managers. Yeah. Then I had a job at Elixir Asset Management, which is the buy side arm of SocGen, and that was more of a strategy role. And then I worked at a smaller hedge fund called Techni Capital, TMT Longshore Fund, and I basically worked with the portfolio manager to do everything that kind of across the board, risk management and options trading and macro analysis and signal stock analysis. And so that was a fun job because I got to do a bunch of different things.
Yeah. And have you managed your own sort of portfolio throughout your whole sort of career, or is it something you've done more recently, or how's that sort of worked out?
I always invested in the market. I'd say when I was on Wall Street, I had a lot of restrictions on what I can buy and sell in the holding periods. So I typically only owned long-term ETFs or stocks that I didn't want to trade or I wouldn't trade around in.
Yeah.
And then since after I left Wall Street and didn't have those restrictions, I had less money to trade with because I started Koyfin, and that sort of sucked up a lot of my financial resources. But I had much more flexibility in terms of smaller amounts. So obviously no holding period and no restrictions. So I do still invest and trade. I think it's a lot of fun. It makes me sort of be in tune with what's going on in the market, forces me to use our platform and really kind of go through that workflow. But I love being in the market, and I think it's great. It's really challenging. It's really rewarding. It's very intellectually stimulating to kind of think about all this stuff.
Yeah, and I suppose we'll come on to Koyfin in a bit, but I think it shows that your experience throughout your career is like it shows with the how user friendly it is to the customers you're trying to target, and how innovative it is in certain areas as well, because there's a lot of features that you just can't get anywhere else. So we'll roll through those in a bit. But throughout your career, was there one place that you thought you learned the most about investing, trading for yourself, like these sort of learnings?
I'm not sure if one is more important than the other. I'd say I had the good fortune and also the curse of being in a lot of different groups. Kind of from my career history, you could tell that I can't keep a job. But what it gave me exposure to is a lot of different areas of how to look at the market. So in the beginning of my career, sort of traditional finance, traditional equity research, where go through a balance sheet and income statement, understand all the different accounting metrics. I got my CFA during that time. Sort of the middle of my career, when I started shifting over to the buy side, one of the things that I learned at Caxton, which was hugely valuable, was technical analysis. And when I was in research, if you told me kind of like, if you said technical analysis, I would sort of laugh at you, and I'd be like, ha ha ha, voodoo, ha ha ha. You're just not smart enough to get a finance degree. And really kind of like when you go and you sit with macro traders, what they do is 90% technical analysis and 10% macro analysis. And so at a certain point, one of them convinced me, or I was convinced, that technical analysis is actually something that's very powerful, and that there's a lot of information of what the market is in the price and how the price is trending. That was really key. I'd say the experience at Citigroup with options was really interesting because, options are one of these things. It's like an onion, could peel it a million different ways. I'd say most people use options kind of like the way that most people use options on Robinhood is just for the delta, for the directional moves. But there's so much more to options in terms of all the other Greeks and creating a portfolio. So options are a lot of fun because it's really like playing 3-dimensional chess when sort of the stock market is one-dimensional. Yep. The last thing I'd say is like towards the end of my career, just an appreciation for risk management and portfolio construction. So, all those things I think are uniquely important. I don't think one is more important than the other.
Yeah, that's fair. So let's start a conversation about your company, Koyfin, which focuses on in-depth data and analytics of the financial markets. In your own words, can you describe what Koyfin is and also its sort of mission, what you're trying to achieve?
Yeah, so we're a financial data and analytics platform. So we help investors research stocks, understand market trends. And basically our mission is to equip every investor in the world, no matter what the size, with the best data and tools, and empower them to achieve more. And that was a mission that we actually came up with over the past several months as we thought about our brand and kind of what we stand for. But basically, we want to help investors understand the market and to make money. And the problem we're trying to solve, and the problem that I saw after I left the hedge fund I was at and started trading on my own, investing on my own, is you have this kind of world, or you still have it today, and even more so 4 years ago, where there was a huge dichotomy with what individuals had access to, which is like Yahoo Finance and the tools from their broker, and what professionals had access to, which is kind of the Bloombergs of the world. And there was not a lot of stuff in the middle. And additionally, all the kind of like Bloomberg platforms and all the other professional platforms, they were built 30 years ago, and they haven't really been updated since then, because there's a lot of technical debt there, and there's a lot of users that are already used to those platforms. So what I thought there was an opportunity for was to create a platform that basically did three things. Number one is to provide high quality professional grade data to the user, and not just for equities, but across the entire market. So for ETFs and mutual funds and commodities and FX and economics. The second thing is to provide the analytics to turn that data into information. So we've created all our own charting tools, dashboarding tools, screening tools, scatter plots, because we want to provide those tools for the users so that they don't have to take that data and put it into Excel. And the third thing is we're really obsessed with an intuitive user interface and making sure that our platform is beautiful, it's easy to use, and it's accessible.
I've been using it the last 6 months to a year, I think. It's probably a year now to say it. And it's definitely my favorite platform that I use to sort of analyze stocks, both on a fundamental and sort of technical basis. It really helps in the complexity when trying to compare different stocks against each other. You've got very good comparison tools there. And also just the top-down nature you can approach it from as well. Like, you've got so much data, global data on stock markets, how they're trending, and different sectors in those countries, etc., which enable you to find, trends that might be ones people would be interested in. So yeah, I highly recommend it. And who do you think gets the most out of, like, as a user, who is it most likely designed for?
Yeah, so a couple of ways to answer that. So kind of like, I'd say the first thing is, because of that dichotomy with professional and retail, and I felt this unnecessary separation, I thought the opportunity for us was not to kind of like pick one side or the other, just to say, hey, the opportunity is because platforms traditionally have focused on one or the other, which doesn't make all that much sense if you think about the use cases of professionals and the use cases of individuals. What we aim to do is to create a platform that's built for professionals but available to individuals. And so we have a lot more functionality, a lot more data, a lot more analytics than you would find on a typical kind of financial website. In terms of kind of like segmenting our users, there's a couple of interesting groups. So number one is definitely the biggest segment of users that we have are fundamental investors, so fundamental stock investors. And we have really good valuation data. We have great analyst estimates and consensus data. So a big portion of our user base are those that are looking at stocks and looking at equities. The second group of users are those that are focused on stocks and other asset classes. So they'll look at fixed income, they'll look at ETFs or mutual funds. And so like financial advisors would fall into that category. They're looking across the market. Yeah. And then the third group of users are more the macro users, and they're using us more for like the economic data, more the top-down data, because we have a good data set for that as well. So those are kind of the different segments for us right now that are important in that order, in sort of that order of importance.
And how many users have you currently got? And can you share growth rates over the last year, et cetera?
Yeah, so we're at about 170,000 users right now. We've quadrupled over the past year.
That's incredible. And have you seen, I assume, a lot more uptake given the last year's incredible volumes online for people that are interested in investing, and what just people, the quantity of people in the market is grown?
Yeah, so that's definitely helped us. I'd say there's been a couple of tailwinds for us that we benefited from. One is this kind of shift and more individual investors in the market. Although I'd say there's a fraction of people that want a platform like Koyfin. I'd say a lot of individual investors that come to the market, they're happy with their Robinhood account, where you look at a chart and there's no y-axis labels, and they're happy with just kind of looking at that. But there is a portion of users that say, hey, I kind of want to understand what a stock is. I want to go into the financials. I want to think about the valuation. I want to compare it versus other stocks. And so those users are the ones that come to Koyfin or find Koyfin. I'd say the second thing that's happened is because everyone is working from home now, Previously, a lot of investors would be like sharing a Bloomberg in the office or sharing resources in the office, and now they're sitting at home and they don't have that shared Bloomberg. So that's caused a lot of people to search for alternatives.
Yeah, okay.
And so we've had a lot of professional investors find Koyfin because of that.
Interesting. And is Koyfin, would you say, I mean, it's obviously changed over time a lot, but initially was Koyfin built around your sort of personal experience in analysing, investing in the financial markets, like the features, platform areas, such as lots of charts and stuff? Where do these ideas come from? Are they from the community or are they from you and your team?
Yeah, it's definitely, in the beginning, it was 100% kind of like my idea and Rich's idea. Rich is my co-founder. And slowly that percentage is shifting with more ideas coming from the community. And more importantly, we're seeing how users are using the platform and then innovating and thinking about new features based on that. But yeah, lots of charts is something that I was doing for myself when I was working at a hedge fund. I would basically take all the charts that I was looking at from my Bloomberg and I would create PDFs out of them and I would flip through the PDFs. And so it's pretty cool when you're working at a startup like ours, when you say, hey, like, why don't we just build this feature into Koyfin, whatever it is. So a lot of it, lots of charts, like market scatter. Like I think scatter plots, XY plots are a really useful way to really look at outliers and to look at trends. So that's something that we built early on. The factor page is something that we built early on, as just looking at which factors are performing well in the day, and that's been very well received by our users. So I'd say initially, I definitely built the platform for myself, thinking there's others like me that would like that functionality. Today, there's more input and kind of more user influence on what we're going to be building and what we are building.
And there's so much information available in the platform. Where would you recommend is a good place to start? Towards you need some sort of repeatable process, I suppose. What should people be checking when they come into Koyfin to get a good grounding of how the market's doing?
Yeah, so I'd say there's three paths that you take on Koyfin when you sign on. And there's sort of three main avenues that you can take. So the first one is really browsing what's going on in the market. So that's done by looking at dashboards that we created for you. So we take a dashboard, we put some data into it, and then it's a good way to see kind of like what trends are going on. So an example of that would be like the top stock movers page in terms of what stocks are moving on the most volume. Our sectors dashboard, where you can see which sectors are performing or underperforming over different time periods, or global yields is another one. So this is kind of where you would go to browse what's going on in the market. The second path is researching an individual security or stock. So for example, if I wanted to look at GameStop short interest, I could pull that up on a chart for GameStop. If I wanted to look at a snapshot of a stock just to understand what the valuation is, I could do that. I could look at the earnings estimate trends for a stock, or look at the price target overview for a stock. So that path is looking at a specific stock or a security like a ETF or a mutual fund. And then the third path is really customizing a dashboard or customizing a watch list with your own securities. So for example, if I wanted to create a watch list of the payment stocks in the world, I could do that. And then I could create a dashboard with different watch lists and different charts for that to be kind of my space where I monitor what's going on. And the cool part about the watch list and the dashboards is not only do you create the watch list, you could then import and use the 300 metrics that we have in our system, whether it's earnings growth or valuation or short interest or earnings revisions or whatever it is.
And you mentioned something interesting there about the short interest, because I know that's something I look at as well. But is there a way to screen the market for stocks that have high levels of short interest? Is that sort of a feature available yet or not?
We don't have a traditional screening tool, which is very high on our priority list. But what we do have is that market scatter tool where you could do an XY axis of a group of stocks.
Yeah.
So in there, you would go into our market scatter tool. You would basically put short interest as one of the variables for XY, and you would pull it up for like the Russell 1000 or S&P 500 or your portfolio ETFs.
Yeah, okay.
And so you could actually see kind of like what are the highest market cap stocks with the short interest, what are the highest value stocks, which are the stocks that are up the most year to date. I actually looked at this analysis this morning. It's if you look at year to date performance versus short interest, obviously huge correlation year to date for the Russell 1000. So our screening tool is really based on that market scatter plot.
Yeah, very interesting. And what are the most popular features of Koyfin, if you don't mind sort of sharing?
No, yeah. So I'd say the custom dashboards are really what we're known for and what differentiates us. And one, it's kind of like this really easy drag and drop and easy functionality to create your own dashboard. And then two, kind of like populating it with the different watch lists or different charts that you want to look at. And you could create different chart templates. So you don't have to just look at a price chart. You could look at you could put a chart there of just 3 valuation metrics, PE, EV to sales, and EV to EBITDA, and be able to drag different stocks into that chart and kind of see that. And then also populating your table with all the different securities, all the different financial metrics that you want to look at, valuation, estimate trends, whatever it is. So that dashboard tool is definitely our bread and butter, and that's what we're known for, and our biggest differentiator.
Awesome. And are you able to share anything about what's next for Koyfin? Any major sort of developments or directions you're going in? You mentioned the screener. I think that'd be a great addition. I think that's one of the things I still use FinViz for. But yeah, it'd be great if you had anything you could share on that, or is it all hush hush?
Yeah. So no, we're super open. So the things that we're working on now are we're going to be releasing transcripts soon. So company transcripts and being able to see those. There's going to be a bunch of upgrades to dashboards, so just being able to link different widgets and some portfolio feature updates in dashboards. We're going to be introducing comp tables, so being able to do comp analysis pretty easily. And then the screening tool is really kind of on our second quarter roadmap, as well as introducing paid plans. So we are going to introduce paid plans in the second quarter as well, and hopefully start generating some revenue. But the screening tool is really, really high on our priority list. It's pretty complex to do, and the reason we've waited is because we've been adding so much data to our platform, but we're now at a good time to start building that. So we'll have that hopefully in the second quarter.
Yeah, it's really good to get insight from you on the tool, because it's become such a part of my daily routine now, particularly on the weekends when I do sort of my prepare my watch list for the week. There's a particular feature that I really like. You find these random things that, well, they're not random, but they're not one of your main features. It's the fact where you can split out an ETF into its constituents in the lots of charts and then rank those constituents by their performance over different time periods, 1 month, 3 months, 6 months. I mean, it saved so much time. I've been trying to do that myself in other platforms, and it's, saved a huge amount of time for me to be able to do that. Because I like understanding, if a certain theme is trending well, I'll then get the ETF that's, a good sort of like gauge for that theme, and then use this to split it out into the holdings that are inside it, and then look at how those individual holdings have been performing to try to get the ones that are, on that have the strongest trends.
Yeah, I love that workflow, and that's exactly how I use it. Is you look at an ETF like last year. I remember when the metals rally, precious metals rally was just starting, and I looked at the precious metals ETF. XME, and just said, hey, what are the strongest stocks in here? And looked at the silver miners and then the gold miners, and what are the strongest stocks in here? And you find these stocks and you're like, wow, this chart is incredible. It's like these beautiful beginning of trends that have been consolidations for like multiple years and just starting to break out. And that's when you can start doing some fundamental analysis and start reading up on it. And so I love looking at charts as the beginning and the basis for them digging deeper into different investment ideas. So I love that workflow you highlighted. That's exactly the workflow of how I use it.
We hope you're enjoying the episode. For interviews like this every Thursday, subscribe wherever you get your podcasts. And while you're there, make sure you give us a star rating and leave guest suggestions along with any other feedback in the review section. Now, back to the show.
I'd like to move on to now talk about your sort of investing trading strategies, if possible, but in particular reference like how you use Koyfin to support it. I thought it would be an interesting way to sort of like do it. Not every question can be talked about in that sense, but we'll see where we get to. So, can you give us an overview of how you use Koyfin at the moment? Like personally, what are the ways you use it? I mean, we talked about the lots of charts a few times, but is there a sort of set routine you have when you approach it? Is it just weekly, daily?
Yeah, so I don't get to use it daily as much as I'd like to. I definitely kind of like go through my process weekly or maybe a little less frequently depending on my workload. I think the lots of charts example you highlighted is really one of the core things that I do is really if I could abstract that, it's really taking kind of like a bigger theme and then diving into the stocks that I think would be the best way to express that theme, or would have the ultimate leverage to that theme. Even if you take kind of like not a traditional theme, but if you take these ARK ETFs that have been so popular over the past year, that have done so phenomenally well, you could really find some high growth stocks in there where, stocks that I'd potentially never heard of, where the chart hasn't been going up for 5 years, that are maybe just starting to break out, whether it's, new biotech stock or new payment stocks, stuff like that. I like to look at like something like the Russell 1000, and then kind of like see over the past 1 month, 3 month, year to date, what's leading and what's lagging, and how's that changing. So I think that's a really interesting kind of like exercise to do, to just say what's going on in the market, what are the themes that are working, what are not working, which are turning, which are slowing down. You can also do that with the custom built macro dashboards that we have in Koyfin. So for example, I'll go to the sector dashboard and I'll just look at the sector performance over the past, again, 1 month, 3 month, 6 month, year to date, and just see, hey, am I aware of all these trends? And if something is kind of new and interesting, like, why is that happening? Is that, what is the thing that's causing railroads to start performing really well? It's something that I remember when the market started turning or when the market bottomed in March, April. Obviously, no one knew if it bottomed. There was a lot of people that said it's going to make a new low and stuff like that. One of the things I noticed was all the broker stocks, all the kind of like trading stocks, so like NASDAQ, all the exchange stocks were doing really, really well. So when you started looking at that and you're starting to kind of like think like, what does this imply for the equity market or equity trading volumes and stuff like that? It really kind of like gives you an interesting insight into what is the market saying? What is the market implying by these things outperforming or underperforming? Then there's kind of like key indicators that I'll look at on my own. Like I think right now, Freeport-McMoRan FCX is a really, really important stock to track because it's benefited so much from the monetary stimulus that has happened. And it'll continue to benefit to the extent that the global central banks continue with their stimulative policies. And so that stock has just performed in a straight line. So I think that's going to be one of the first stocks to turn on a relative basis and on an absolute basis when the market starts sniffing out that liquidity can tighten. So that's kind of like one stock that I follow in particular. But really kind of like those macro dashboards in terms of sectors, countries, currencies, it's always just good to poke around, just kind of say, hey, what are the trends that are happening? And do I understand why they're happening? And are there any surprises? And what do those surprises mean?
Yeah. And what you mentioned discovering that broker theme. Did you find that by looking through 1,000 charts, the Russell 1000? Is that what you said? You're trying to find, you're writing down the stocks that are clumped together in for good performance. Is that, and then saying, okay, these are all brokers. Is that how you're doing it?
Yes. So I would just look at the Russell 1000 and just look at the like 1 month performance, just to kind of see like, hey, which are the stocks that are outperforming over the past month? We have a sector filter, so you could break them down by sector. Yeah. In the lots of charts, and in the market scatter as well. And then a lot of times I will put stuff. I will create a dashboard or a new watch list of stuff that I'm watching. So, for example, in April, I would call it like April longs, and I would create a watch list of stocks that I'm watching in April. And I would always, or a lot of times, I would use that lots of charts feature to then either take that watch list or to look at the stocks that I've identified. Because you really kind of like, if you zoom back, if you look at the 1 year, 3 year, 5 year chart, you really get a sense of like, is the market trying to tell you something? Are there trends that are starting to break and are going the other way? Yeah.
And my next question was, do you use certain fundamental data to help either find stocks you're interested in or improve your conviction in stocks you might have been highlighted in the lots of charts tool?
Yeah, so I love looking at a chart of consensus forward estimates versus the stock price.
Okay.
So I just, I want to find stocks which are obviously growing earnings and where earnings estimates are being increased. And so those two things make for really good opportunities. And so I'll use that. What we do is you could graph consensus forward estimates every day and look at it versus the stock price. And you'll be able to kind of like see over time, are estimates going up, and is the next 12 months going up? So if you look at it for like a company like Shopify or Salesforce, that's a nonstop uptrend, right? With kind of like them growing earnings and estimates, and analysts upgrading estimates, increasing estimates. So I definitely want to see that in the stocks that I'm buying that I think are starting to look good. One stock that I've recently found, kind of like using that and from some personal experience from Koyfin, is a company called Upwork, which is basically a marketplace for all this labor. And as the world gets more used to working remotely, as more businesses are being started and people are looking for just freelancers, that's kind of the network that companies are using to find their freelancers. So I think like Upwork is a great stock. So when I look at a stock like Upwork, I want to make sure that the next 12-month sales and EBITDA and earnings, if the company is generating earnings, are all trending in the right direction. So I have a graph template. It's basically a graph of all those things that I saved as a template, and I would pull that up for any new stock that I'm looking at.
So, and that's in the sort of individual stock screen, is that right? So, and then you're applying a template to it and then changing the stock that you're interested in. Is that right?
Yeah. So if you go to our graphs, you basically select what you want. So in there, I would select stock price. I would select analyst estimate sales, analyst estimate EBITDA, analyst estimate EPS. I would graph all those. I would save it as a template. So now that template is saved for those 4 selections. And I could basically pull up that template with any stock. And I could also put that template in my dashboard so that I can drag any stock from my dashboard into that chart right in the dashboard.
Yeah, awesome. Haven't used that yet, so I've written that down. I have to check that out after our call. And you used to be head of macro and thematic trading strategy, as you mentioned earlier. And we talked about using themes to map out where the money is moving. How do you look at themes deeper than sector? Is that something you try to sort of grasp from the stocks in Russell 1000, for example? Like the broker stocks is a bit deeper than financials, or I assume that's a sector they're in. Do you do that? And is there a method you used for that?
I do have kind of like a workflow, or I do that. I don't know if it's kind of like a direct thing or a specific thing that I do. I'd say for me, what works is looking across assets or looking across kind of the major assets and seeing if there are any trends that I could apply to other assets. So if there's something happening in the fixed income market with certain countries' yields that are doing something, I would then kind of like ask the question, is that being reflected, or is that trend being reflected as much in the equity market? And so I would do that for fixed income. Like I could do that for FX. I would do that in commodities. So I would sort of look at cross-asset trends that are happening and sort of say, why is that trend happening? And if we were to extrapolate that trend to other assets, what would that mean? And so it's sort of like something, it's an iterative process across the different assets using the dashboards that we have on Koyfin.
Do you go as deep as, an equity theme such as solar or cannabis stocks have been quite interesting recently?
Yeah, absolutely. I think those are great themes. I think they're probably less macro themes and a little more thematic.
Yeah.
And so like with cannabis, obviously that's a big theme right now with the new administration. And so that's something that I actually looked at a couple of years ago. And when I looked at it, I was like, wow, this is like the biggest short in the world, because none of these companies generate any earnings and they're all valued at like 300 times sales. And so that ETF actually came down after that. I think a lot of these companies still will never generate and won't be profitable because they're not in the right part of the supply chain. But there's a new ETF, I think it's called MSOS that I recently looked at. It's basically the stocks in the U.S., so it's not the Canadian ones, and so they're a lot more leveraged to the democratic legislation that's going to be happening here. So that's just something that I found by looking at the traditional marijuana sector, MJ, and then kind of like reading up on it and saw it mentioned and researched that. So, Google is a great tool. It's always just fun to read, like Seeking Alpha articles or blog posts or even Reddit now, and always kind of pop ideas into your head. And for me, I always need the charts to sort of confirm that and to kind of see some momentum building both on the price chart and on the fundamental earnings revision side as well.
And in terms of, do you try to look at the market in terms of like thematic sort of trading? And if you do, any themes you sort of like the look of this year?
I think the biggest theme for this year is going to be dollar weakness and kind of the repercussions of that. I think these macro themes tend to move in 10 to 15-year cycles. And we're just coming off of a 13-year US dollar bull market. So I think there's definitely scope for more dollar weakness. And what that means for equities is just emerging markets performing much better than they have over the past couple of years. So emerging market strength, strength outside the US, strength in commodities. So that's kind of one of the biggest themes that I'm looking at.
And is there any way you use Koyfin to keep on top of sort of warning signs in the market? Like, for example, you could sort of say it's overextended at the moment. Do you use any sort of like indicators do you look at indices and their general trends and stuff, and certain things would cause you to take caution, this sort of thing?
I think it goes back to kind of like that cross asset analysis in terms of like you'll have, typically when things slow down, you'll have kind of that reflected in the sectors. You also have it reflected in the yields. So yields are really good at smelling out weakness. And so you'll have yields rise pretty significantly before the equity market typically turns around. And that's something that happened last year or about a year ago when yields started rising at the end of 2019. Now, obviously, they weren't smelling COVID out, but they were sniffing out a slowdown in sort of the economy and sort of the end of the cycle. So I'd say looking across assets and really understanding cross asset performance and what that means and the implications for the economic cycle and for the equity cycle. I think that's pretty important. So you could do that in macro land, or you could do that in sectors and kind of watching sectors and seeing what's outperforming and underperforming. I'd say in an environment where financials are outperforming and consumers outperforming, that's not an environment where the market is telling you there's a slowdown coming. If those sectors start underperforming, then that is potentially, or that might be one input into, hey, something might be changing.
Yeah, of course. Well, thanks, Rob. We've got a last sort of thing we do at the most interviews, which is called the quickfire round. It's just a few questions, not looking for any long answers. It's just a fun thing we do at the end of the interview. So there's 6 questions. I'll just roll through them now, if that's all right.
Let's do it, yeah.
The first one is name an investing hero.
So one investor that I really like following on Twitter again is this guy named Mark Dow. He used to be at a hedge fund called Faro, which has a really similar style to what I described before, which is marrying fundamentals and technicals. He's super active on Twitter, shares his thoughts, and I think he's a really, really good investor.
Yeah.
So that's someone I would highly recommend for other people to follow.
Yeah, perfect. And top tip for your younger self?
To definitely moisturize more every day.
Favorite book? It doesn't have to be an investment trading book.
I read The Fountainhead when I was younger, and that book sort of stayed with me. And I love the protagonist of that book, Howard Rourke. So a long book, but that's one that stuck with me. And an important lesson the market has taught you at some point? Yeah. So in 2000, late 2008, early 2009, I was just starting at Caxton. And I lost a lot of money betting that the market's going to go lower. That's because I had a view, and I refused to believe that view wasn't right. And so that's sort of when I started to think about technical analysis and to really value technical analysis. When I saw other traders using technical analysis to say, hey, something's changing. You can't see that definitively in the data, but the market is telling you that something's changing. And so for me, that was a big lesson, a very costly lesson, but a great lesson to internalize.
Yeah, interesting. And Bitcoin, bullish or bearish?
Over what time frame?
Long term.
Long term. I'm a Bitcoin skeptic, so I'm skeptical that Bitcoin will retain value. Unless there's going to be a very clear use case for it. And so, I'm open to the idea, but I'm not let's just say I'm skeptical.
Yep. And last but not least, favorite place in the world and why?
I love Tel Aviv. I love Tel Aviv because it's on the beach. So I love the beach. I love the people that are in Tel Aviv. It's got such an incredible vibe. It's got a very kind of rich diversity, much more diverse than the rest of Israel, much more kind of very open-minded, a lot of positive energy, great music, unbelievable food. So would highly recommend anyone who has a chance to go there.
Yeah, I've not been there. I've heard good things. I've definitely one that I'll try and get to soon. Well, hopefully maybe this year people will start traveling again. Well, thanks, Rob. That was really interesting. It was great to get your insight on that. Actually, I have one last question. There was a feature that I thought was really good. It's actually how I originally found your platform was through Howard Lindsay. He shared his watch list. Can you follow his watch lists? I thought that was I'd not seen that before. And with the latest update, it disappeared. I was just wondering if that was coming back.
We sort of tried to secretly pull it out of there. No, a lot of people noticed because it was a very widely used feature. So the backstory is we had this big upgrade that we were working on last year. And part of the upgrade was rebuilding how dashboards and watch lists were designed. And so we had to rip it out and start it from scratch. And because that big upgrade was delayed, at some point we had to say, all right, we have to kind of like get it out. And we can't build new functionality. And so unfortunately, we had to release that new functionality without the sharing feature. Yeah. But that's something that we want to bring back very soon. And that's something that's been frequently asked of us. Yeah, cool. Excellent. Excited to see that again. Yeah, I'd just like to finish as well, but I highly recommend people check out the Koyfin platform. It's definitely one of the best, or the best in the space. Is there anything else you'd like to say before you sign off, Rob? No, just be kind to each other. That's it.
Okay. And just quickly, where can our listeners go? Are you active on Twitter at all, or do you read any blogs on Koyfin?
Yeah, so I definitely on Twitter. So the handle that I tweet under is our company handle, which is Koyfin Charts. So I'll put ideas on there. I do have an interview on YouTube that I do every 2 weeks. So you can subscribe to our YouTube channel. And hopefully we'll be putting out a lot more content, both educational on how to use the platform and a lot more market content this year as well.
Cool. Cheers, Rob. Hopefully catch up with you again soon.
Awesome, Matt. Thanks so much for having me. That was a lot of fun.
Thanks for listening, everyone. Just a quick note before we sign off. If you're looking for an easily digestible daily update on the markets, this might be of interest. Opto Updates is our short newsletter sent every day during the trading week, giving you a bulleted list of the top 7 stories from the global stock markets. We've done the hard work for you, highlighting relevant opportunities and trends, and in addition, we'll also keep you notified of any new products, stock reports, or webinars from the Opto world. If you're interested, sign up using the link in the show notes. And thanks also to Co-Fruition for consulting on and producing the show. Until next time.